SoFi took a major hit today, and we need to break down exactly what happened, the key takeaways, and everything else you need to be aware of. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. The entire market faced a downturn and SoFi was no exception, dropping by 5.72%. The stock fluctuated between a low of $14.58 and a high of $15.56, making it difficult for traders to capitalize on any major price swings. It wasn't just SoFi experiencing this pressure. Most stocks across the board saw limited upside, leading to a rather challenging trading session. In terms of trading volume, approximately 54.28 million shares exchanged hands compared to the average of 44.06 million. Interestingly, no company-specific news, SEC filings, or announcements were behind this sharp decline. Instead, the stock was at the mercy of broader market forces. If you're wondering what caused this market-wide dip, it all boils down to consumer sentiment data. The Michigan Consumer Sentiment Index came in at 64.7, significantly lower than the 67.8 forecast. This triggered concerns over inflation, which has been the central theme throughout the week, especially after the release of the FOMC minutes and Walmart's earnings report. This isn't the first time weak sentiment data has rattled the market. A similar scenario unfolded on February 7th when the forecasted sentiment was 72, but ended up at 67.8, causing a significant market drop. The cycle of optimism and pessimism continues, with inflation fears at the forefront. Investors are left navigating a highly volatile landscape where market sentiment shifts rapidly. One day there's optimism about potential economic recovery, and the next, the Federal Reserve hints at rate hikes, creating uncertainty and frustration among investors. The market itself has become as unpredictable as a roller coaster ride. Short selling activity also increased, with an additional 407,000 shares being shorted. While not a massive jump, it indicates some traders are positioning for further downside. At the same time, market manipulation appears to be at play, given that the cost to borrow average is sitting at a mere 0.01%. This suggests that some brokers are incentivizing shorting by making it extremely cheap. SoFi has long been trying to establish itself in an industry dominated by traditional brick-and-mortar banks, and those established players are unlikely to make its rise easy. One way legacy institutions can apply pressure is by encouraging shorting, making it harder for SoFi stock to gain traction. The overall short interest currently stands at $1.97 billion, with utilization at 13.79%. Shifting focus to options activity, today's session saw $21 million in call options and $9.52 million in put options traded. Bearish sentiment dominated, with 47% of options transactions leaning negative. The put-to-call ratio gradually increased, indicating that investors were preparing for further declines. Early in the week, there was optimism that SoFi could reach $18, but that sentiment has deteriorated. Currently, the consensus target sits at $16.50, while bearish traders anticipate a dip below $14, with some predicting a potential slide toward $12.50. Looking at the technicals, SoFi closed at $14.68, meaning that 7,000 open interest contracts at the $14 strike are now in the money, while another 1,000 contracts at $14.50 have also gained value. However, a large portion of other options contracts will expire worthless, which likely contributed to the increase in short activity. Institutional buying was relatively subdued today, with fewer major players stepping in to acquire shares. Instead, much of today's trading activity was driven by selling pressure as investors aimed to de-risk their portfolios. Dark pool transactions were also relatively quiet compared to normal activity. One trade worth $1.53 million was recorded roughly 10 minutes before market close, while another transaction involved 1.2 million shares. Typically, dark pool activity is more substantial, so the lower volume in this space could indicate hesitation among institutional investors. SoFi is now trading within a tight support and resistance range, with 14.45 cents serving as a key support level. If the price dips below this mark, further declines could follow. On the upside, resistance is set at 14.92 cents, followed by $15.69 as the next key target. Regarding analyst coverage, one rating update came through yesterday, though no specific price target was assigned. The analyst, Vincent from BIG, maintained a hold rating and has a historical success rate of 48%. Based on current analyst projections, the average price target for SoFi stands at $14.64, which represents a minor downside of -0.2% from its closing price. While this doesn't indicate massive losses ahead, it also suggests limited upside potential in the near term. One noteworthy development involves hedge fund activity. Data from Q4 reveals that hedge funds significantly reduced their positions in SoFi. This contradicts some narratives circulating on social media that institutional investors are heavily accumulating shares. In reality, several hedge funds were offloading their holdings. One notable example is Cathie Wood's ARK Invest, which trimmed its SoFi position by 25% in Q4. While this doesn't necessarily signal doom for the company, it does highlight a shift in institutional sentiment. From a technical perspective, there are critical levels to watch. The stock is currently testing support at 14.49, which aligns with the super trend indicator. If SoFi breaks below this level, algorithmic trading could accelerate selling pressure. So far, algorithms haven't been aggressively pushing the stock lower, but if support fails, further declines could follow. Additionally, SoFi has already fallen beneath its 50-day moving average, which currently sits at $15.71. Historically, breaking below this level has led to roughly 30% declines, making this a key threshold for traders to monitor. Looking ahead to next week, the 100-day moving average at $13.79 will be another important level to watch. If SoFi slips below this mark, the stock could find itself oscillating between the 100-day and 200-day moving averages for an extended period. While today's session was tough, the market downturn may offer one silver lining: a reset of technical indicators. The stochastic RSI is moving out of overbought territory, which could allow for a potential bounce once selling pressure eases. Ultimately, market sentiment remains fragile, and concerns over inflation are fueling widespread caution. If you believe the fear surrounding inflation is overblown, then this could be a dip-buying opportunity. However, many data points suggest that additional downside is possible. Multiple sources are now echoing concerns that inflation may be making a comeback, mirroring the conditions seen in mid-2024. Whether this fear is justified or exaggerated remains to be seen. Let me know your thoughts on today's market action and how you see SoFi's trajectory playing out in the coming weeks. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.